JPMorgan Chase and Coinbase have launched a strategic partnership that's going to make buying crypto easier than ever before. Banking giant JPMorgan and crypto powerhouse Coinbase are teaming up to give over 80 million customers frictionless access to Bitcoin, stablecoins, and other digital assets. And the best part, you'll soon be able to fund your Coinbase wallet using your Chase credit cards. You're going to be able to convert some of your rewards points into USDC, and you're going to be able to directly connect your Chase bank account with your Coinbase wallet. But there's a catch that might irritate some of the hardcore crypto purists. So stick around to find out what. Before we unpack it all, make sure you click on the like button and subscribe to this channel so you're always the first to know when there's a big news coming out. I also posted a link in the description below for my detailed notes on this particular topic. So let's get started. On July 30th, 2025, JPMorgan Chase announced a strategic partnership with Coinbase. The collaboration aims to bridge traditional banking and digital asset by enabling Chase customers to buy crypto directly through their bank accounts, credit cards, and loyalty rewards. So the initiative will roll out in phases. We're going to have the credit card funding in the fall of 2025, a few months, with direct bank to wallet linking and the rewards to crypto conversions launching in 2026. So why does it matter? Well, this is really the first time that a major US bank has embraced crypto integration. And for all that, it's like JP Morgan, and we know that Jimmy Dimon didn't really like crypto in the past, but JP Morgan, a banking titan, has over 80 million retail customers and is effectively endorsing crypto as a part of everyday finance. This is the first time really where a banking that has so many regular customers and retail customers is going to be tying in with and partnering with a crypto giant and crypto powerhouse like Coinbase to make that bridge very easy. And that, to me, that I think this is very, very massive, because so far it's been very difficult for people that have a bank account to convince them to move some of that money into USDC or whatever to do whatever investment they wanted to do. So this partnership really signals a shift from a crypto as a niche investment for some technocrat and fintech people to a mainstream financial position or investment. So Coinbase is positioning itself as the trusted bridge between banking and blockchain. And this is a massive, strategically, it's absolutely massive for Coinbase. Now they're the de facto bridge for the banking, the retail consumers and small businesses, and the crypto world. So this is absolutely phenomenal. It comes just days after the Genius Act was passed. We also had the White House Digital Asset Report that was done. So these are the two big things that happened and that basically are bringing in the golden age of crypto and make it like pro innovation. It was only a couple of days ago that we had the Genius Act that enabled the stable coins, and then the digital asset report that is trying to really push all the different government organizations to basically open the doors for the crypto ecosystem. So this is absolutely massive. So here's the announcements. So JPMorgan Chase and Coinbase announced a strategic partnership that sets a new standard for customer choice and security in the innovation economy. This collaboration introduces features designed to enhance access and optionality for our mutual customers. So the initial phase of the partnership is going to focus on these three aspects. They're going to be phased out over the next 18 months. So the direct bank to wallet connection, that's going to happen in 2026 through the Secure API. So Chase customers will be able to seamlessly link their bank accounts to Coinbase wallets. The other feature is transfer Chase Ultimate Rewards points and transfer that and convert them to USDC into their Coinbase wallet. That's also planned for 2026. Beginning this fall, customers will have the ability to use Chase credit cards on Coinbase. So this is only in a couple of months. So for the first time, customers will have the ability to fund their Coinbase accounts using Chase credit cards. So I'm not sure exactly how that's going to work. I'm hoping that there would be some kind of stronger connection where you're using your Coinbase wallet to buy something online and then it's automatically going to take it out of your credit card and it's going to make it into a credit card transaction, but through Coinbase. Not sure. So a lot of details need to be figured out. So we expect these direct bank to wallet and ultimate rewards features to go live in 2026, and this one in the fall of 2025, which is the use of the Chase credit cards for the Coinbase wallets. This partnership marks a significant step forward in empowering our customers to take control of their financial future. This is from Melissa Felcher, Head of Payments and Lending Innovation for JPMorgan Chase. We are excited to partner with JPMorgan Chase to onboard the next generation of consumers into crypto. Together, we are expanding choice and lowering barriers to entry for consumers to participate in the future of financial services on-chain. This is from Max Brandsburg, Head of Consumer and Business Products at Coinbase. This partnership, if this works out, is really going to make it hopefully a lot easier for regular bank customers to transfer back and forth between their digital wallet and their current wallet. If they do that successfully, I think this is going to be an absolute game changer for the crypto industry. Here's another more an analyst viewpoint on Coinbase JPMorgan Chase partnership. So in a move that is expected to shift how the banking industry engages with digital assets, Coinbase on Wednesday inked a new partnership with JPMorgan Chase, the #1 US bank. The banking industry has long been wary of crypto. Analysts have previously noted that banks see digital asset as hindered by regulatory uncertainty, compliance risk, and reputational concerns. And that's absolutely right. I mean, in the past, the crypto has been absolutely a bunch of crooks, international organized crime that are using it to transfer money between countries, pump and dump schemes, basically a lawless industry. And that's why banks were staying away from that. But now, with the regulations that's coming in, with the direction of this government, of the U.S. government, this is going to change, hopefully, for the better. So some banks even prevent their customers from investing in crypto due to the prevalence of scams that plague the industry. I would say even more than that. I had a fractional real estate business where I was using crypto to keep track of a digital share of real real estate investment. My bank account was shut down by the bank because it was dealing with crypto and they didn't want anything to do with crypto. They didn't ask any proof of anything. I provided all the documentation that they want to open the bank account. I told them what it was, but they just didn't want to hear anything about it, and they just shut down the account. And then I had to find somewhere else to move the money, move the banking. And it's not the only sign things are changing. In June, Bank of America CEO Brian Moynihan signaled his firm is looking at creating a crypto stablecoin once the key legislation passes. And really, the Genius Act has passed. We're waiting right now on the Clarity Act to really clarify what's going to happen between the SEC, the CFTC, and all of these things, these organizations, these departments, who's going to have control, jurisdiction on all these transactions. So that's going to be very interesting to see. Having a stable coin is okay, but having this partnership, JPMorgan and Coinbase, this is absolutely massive, and it's a game changer. Having a stable coin, lots of people have stable coins. We already have USDC. Having a B of A stable coin is not going to change much. Citibank CEO Jane Fraser told analysts on a post-earnings conference call the bank may also issue its own stable coin for digital payments. So again, kind of like, yeah, that's nice, but it's not a game changer. I find that this particular deal is going to be, it's as if JPMorgan Chase knows what's going on, knows what the game is about, and they want to play ball. So that's what it looks like to me. This has a massive impact on how the public views crypto and will play a major role helping the industry go mainstream. This is from Carlos Guzman, an analyst at GSR. So we should view it as a tactical rather than transformative kind of change. Will Beeson, founder of stablecoin infrastructure firm Multi-Liquid, That's what he told DL News. The structural shift will come when banks themselves embed digital asset capabilities natively. He is right. I mean, but if you're just doing stablecoin, I totally agree. This is like, it's no big deal. This is a little bit more transactional. I think it's going to shift. It's going to help the crypto world and crypto assets being more mainstream and more acceptable. And that's going to bring a lot more people in here to actually maybe do actual transactions in cryptocurrency. So that's going to be a game changer. And after that, then yeah, as we go through that, then maybe there's going to be a more transformative change to the banking industry where they're going to use blockchain natively in their transaction. So this is about the JPMorgan Chase CEO, Jamie Dimon. He was very skeptic about crypto in the past. And in 2022, for example, he called digital assets a decentralized Ponzi schemes. And earlier this year, he said Bitcoin has no intrinsic value and warned about crypto's use among sex traffickers and money launderers. I mean, he had a very good point. I think this is absolutely true that over the last 15 years, there was a lot of good people that wanted to do some good things. But unfortunately, that was only maybe 5% of the people that were involved in the crypto industry. 95% were about Ponzi schemes. They were about pump and dump schemes. They were about stealing money from people, sex trafficking and drug trafficking, money laundering, all kinds of illegal international exchanges. So had a good point there. That's true. Bitcoin really had no intrinsic value. It didn't provide any value. It was just there for speculation. Only 2% US adults are using cryptocurrencies in actual transaction to buy things, to buy products and services. It was just used for speculation. And I'm hoping that with this partnership is going to bring retail people and small business people into the crypto industry, have real transactions in the crypto industry. So the shift parallels Larry Finks, who also went from being a crypto skeptic to having BlackRock become one of the most crypto involved asset manager. So there's a lot of the key players out there that are starting to change their tune and see that the thing is evolving, and we can actually, and just like myself, starting to think that, hey, you know what, this could actually work. It could actually be something. In order to do this, we needed to have the Genius Act. We need to have the Clarity Act. We needed to have a blueprint or a roadmap to do this. And this is kind of provided by that digital asset report that was published last week. Also, so that's right. So under Trump, the SEC has dropped like several cases against crypto firms out there. So because the legislation is changing and the direction that the administration wants to get into, then there's no point in having cases against some companies if really they're not doing anything wrong, or the laws are going to change so that they're currently not doing anything wrong. As I mentioned, like credit card funding, fall 2025. So the possible downside around that is the regulators may scrutinize credit-funded crypto purchases. So there might be some kind of limit, some kind of KYC checks to make sure that everything is legitimate, so that we don't end up in a situation where we have a bunch of people stealing money from your credit card, and also people. So it depends on how the whole transaction is going to work, but this is something to be worried about. Ultimate rewards to USDC. This is a conversion of the points basically, and this marks the first time that the major credit card rewards program is going to offer a direct to crypto conversion. So obviously that's never happened before, and so this kind of raises some question. If I can go and convert 100 points to 1 USDC. So what's the advantage then of having these rewards? Why don't you just give them like cash back? Why don't you reduce your fees? Why don't you, there's other things that you could do. So the points would either become a de facto currency or would just become completely irrelevant if you're just going to convert them to cash and use them for whatever. But this could be a good scenario again for people that they see their reward points as kind of nothing, they're not using them, and say, oh, if I'm not using them, they're kind of worthless to me. I might as well convert them into USDC on my Coinbase account. So there could be a whole conversion of that going on because people don't value the rewards as much. And now they would have USDC that they can actually try their Coinbase accounts to real transaction. So that's going to be pretty interesting here and kind of like push some of the users to go towards that. Now, the bank to wallet connection, JPMorgan plans to launch the direct API connection so customers can link their Chase accounts to Coinbase wallets. You'll have funds instantly between your checking account and crypto wallet. I mean, that's kind of what we're looking for. That'd be absolutely amazing. So this could reduce fees, settlement times, and make crypto more convenient than traditional wire transfers. I had a situation where, it was kind of painful. I'm paying some employees and contractors that are outside the United States, and I have to pay them through Payoneer, through Wise, or through expensive wires. And now I would just be able to use this, just basically a straight transfer through Coinbase to pay these individuals. And I'm paying fees for that. I'm paying fees for Payoneers. I'm paying fees for Plaid. I'm paying fees for Wise. I'm paying fees for sending transfers to other countries. Both stress that the customers maintain custody of their funds, and Chase is not taking on crypto custody risk as well. So that means that once the coins are in the wallet, they're in the Coinbase wallet. So they're not in the JPMorgan account anymore. They're under the custody of Coinbase. So this is a little bit of a difference. So what are the winners and losers? Well, winners, so basically, I think everyday customers, would benefit from that. So those would be like, obviously, the people that are Chase accounts holder. They would be able to easily kind of like take advantage of that and then be able to set wire instructions and send payment, ACH payment, but instantly, instead of having to wait 3 to 5 days to send a regular ACH payment. Is insane. Why not have it at the speed of a wire? Coinbase is also going to be a big one. Now you're going to have an influx of customers, people opening wallets. So investing in Coinbase on the stock market, I think it'd be a very, very good idea. 80 millions of customers that are going to be looking at that. Obviously, stable coins is also going to be something that's going to be pushed quite heavily. So the partnership would funnel loyalty points into USDC as well. So there's going to be an influx of USDC demand. So this is a great one way. The other way is that the money is going to leave the bank. The cash itself would be transformed from a cash account into a bank into a USDC account that would be then secured by cash or by US Treasuries. There are some economic impact of having this shift of capital around. So that's going to be interesting to see what the impact of that is. So some are the losers or people that are not kind of quite on board. So other banks and exchanges like competitors like Bank of America, Robinhood could lose market share for sure. All they're doing really is a stable coin that's going to be out there. Boring. Crypto purists also are going to have some issues as well. Kind of worry about the credit card funding. So that's going to be one thing. They're going to be also kind of like worried about security, privacy, kind of like changing the way things are done in crypto. But I think it's for the better. I think we need to have something like that to make it more safe and more secure for everybody. And that way that's really going to take off then. Regulatory critics, so lawmakers are also wary about crypto, may view this integration as going around consumer protections. There's tons of rules. There's no doubt about it that there's going to be tons of rules, regulations, jurisdiction that's going to have to be changed. They're thinking that this is going to push the regulations and the compliance and all that. Hopefully JPMorgan is going to be kind of like maybe a leader in that. Is that what you want as a consumer, is to have a bank write the rules and send that to the government? So maybe not. But the thing is that, are we going too fast is the kind of the question. There's so much work that needs to be done to now kind of like prepare the environment for the crypto ecosystem and other digital assets. Are we going too fast, and are we going to screw this up? So that's the big question out there. In terms of the macro impact, so the partnership could spur mainstream adoption. So that's what we're hoping for. 80 million customers that would go into this. So that would create lots of people lots of transactions that maybe didn't happen before, or is this just going to create a bubble that people are just going to invest in all kinds of different things? And so we'll see how that happens, how that evolves. This may also force regulators to pick up the speed, accelerate, provide the guidance on the crypto custody, on the taxation, on the reporting, on the consumer protection. Again, my big question is, can they catch up? And once they catch up, if they catch up, can they keep up? Because this thing is evolving rapidly. Some of the hidden twist in this whole thing is these features are going to roll over the next 18 months. So consumers may expect like some immediate access to these things, but only the credit card funding is going to happen this fall, so in the next couple of months. So that's fantastic. The other things are going to happen later on. So this is going to be a phased approach, and they're going to have to work with regulators to make that happen and make sure that the consumer is protected and make sure that it's all going to run smoothly. Second, using credit cards to buy crypto could be treated as a cash. Is it going to be treated as a cash advance, or is it going to be like a linked transaction? So that's what I'm kind of hoping for, is that you're going to go to an online store, you go to Amazon, and then you want to buy something. Instead of using your credit card, you use your Coinbase wallet, but you don't have any money in your Coinbase wallet. So it's going to take that wallet and it's going to be linked to your credit card, and it's going to draw from your credit card, but it's going to be considered a transaction through your Coinbase wallet. That's what I would like to see, if that's possible. If not, then that means it's going to be considered cash advance. That means higher fees, higher interest. That's not good. So this could surprise a lot of the people that are not familiar with that. So JPMorgan, they haven't clarified the details yet, but we'll see what happens. Next is the data sharing and privacy. So JPMorgan touts enhanced security, but the integration means both companies will share customer transaction data. This is welcome sign of compliance, privacy-oriented users. I mean, JPMorgan has been in the game for a while. That would bring kind of like a next level of security, comfort, and confidence when we're talking about Coinbase. So if you're enjoying the story so far, this is just getting started. The situation is evolving, as you can see, like every day. So if you want to stay ahead of the curve, make sure you click on the like button and subscribe to this channel so you don't miss out on all these big stories and you stay on top of it. I also posted a link in the description for the detailed notes of this video. So if you want to look at that, make sure you comment. So would you use your credit card to buy crypto? Are you excited about this partnership? Would you be willing to convert your travel points or your reward points into USDC, and why? This is very exciting. And again, like the JPMorgan Coinbase partnership is a seminal moment, a watershed moment, whatever you want to call it. And it marks the first large-scale union or partnership between Wall Street and crypto. And that could onboard like millions of new users into the crypto ecosystem. But it raises a lot of questions, no doubt about it, about fees, privacy, consumer protection. And this is what the kind of stories and the kinds of things that I'll be following on to see what's happening with the Clarity Act, what's happening with all these other things to make sure that the road is paved properly and fast enough for all of us to be safe and secure in this new crypto environment. So let me know in the comments, and as always, stay tuned for the next crypto bombshell, and see you next time.